Greetings, members one and all of the Salivation Nation. Is this the news we've been waiting for? Silver investing hits record. Bullion trading jumps 82%. Let's explore. Yes, this comes to us from BullionVault, which is a dealer, and obviously you've got to take a look at the source of a lot of these things. But no matter what, the facts are facts, and we'll kind of look at this and kind of disseminate and see. I think there's still some things we need to find out before we can really celebrate too much about silver investing and gold investing. But there's strong investment demand on gold and silver price volatility. This says that its private investing in gold continued to grow, and silver enjoyed record demand in September as prices rose further amid worsening economic data and geopolitical tensions, writes Director of Research Adrian Ash at BullionVault. Gold prices this September touched new all-time highs for UK and Euro investors, and it averaged the highest daily price in US dollar terms since March of 2013. Rising 0.8% to reach $1,511 per ounce despite falling hard as the month ended. Silver prices hit their highest month average in 3 years, adding over 6% to reach $18.17 in US dollar terms, like gold rising for the fourth month in a row despite Monday's drop. You know, and I think it's fascinating, especially for gold, that in terms of the euro and the pound, these are all-time highs for gold, for these currencies. The volatility across precious metal prices saw daily trading volumes on BullionVault, the largest online and mobile app marketplace for private investment in physical gold, silver, and platinum, average 4.1 million pounds, up 82% from the number one platform's 12-month average. Now, that is very good, but it's anecdotal. In other words, that's just on BullionVault, but it is a physical. This is interesting to see for private investment in physical gold, silver, and platinum. It is encouraging to see that much of an increase, but it'd be interesting to see it across all platforms. Amex, other bullion dealers, and the like, in other physical markets. The number of people ending the month with more gold than started slipped 8.6% from August spike to the most since Donald Trump's U.S. election victory in November 2016. Yeah, that's interesting. Okay, so that went down. But the number of net sellers fell 3 times faster, down 26.5% together. That pushed the Gold Investor Index, a unique measure of actual trading decisions in physical gold, up from 55.2 to 56.0, the highest reading in 13 months. So you have to kind of take a look at the data, average out with this selling and buying. So here we see in this in this chart here, Gold Investor Index in the red, and the average price of gold. So you can see here, we've seen an anomaly here when the average price of gold is going up and the Gold Investor Index is up. Look here, back here in September of 2016, we saw these numbers invert, with the average gold price going down, and it was sky high with those investing in it. So I don't know that this is necessarily big news per se in the actual grand scheme of things, but it is maybe the beginning of a trend of a big push more towards the physical. We'll find out here. 2019's jump in precious metal investing is strongest in the Eurozone, where interest rates are most negative. The crash of dot-com bubble 2.0 is putting a shine on physical bullion for private investors. Yes, September's count of first-time precious metal investors fell from August's spike near a 3-year high, but it remained 60.7% above the prior 12-month average. Eurozone residents again showed the strongest new interest, up 72.6% from the prior 12-month average versus a rise of 43.2% in the UK and a slip of 0.9% in the US. And again, I think this is regarding to their business, in other words, BullionVault's business. Euro investors, who led the jump in the net demand for silver, which rose to 21.2 tons, is set to the largest monthly total since BullionVault added the metal to its trading platform in January of 2010, 5 years after opening with gold. That took the quantity of silver vaulted and insured for users of a new record above 802 tons, which in each client's choice in London, Singapore, Toronto, and Zurich. September's gold demand was also positive by weight, with the BullionVault users buying 73.9 kilograms as a group net of selling. That took the total quantity of gold vaulted and insured across those same locations, plus New York, up to a 4-month high of 38.3 tons. And here we can see Silver Investor Index and the average silver price. Almost the same kind of activity here on this side, but a little different on this side, a little off kilter towards the end of 2016, beginning of 2017 there. Silver prices extended summer's 2019 spike in early September to touch the highest since 2016 at $19.65 per ounce before retreating $2.40 by month's end. The volatility saw the number of people starting to add to their silver holdings across a month slip 4.7% from August's 3-year high, but the number of sellers fell harder, shrinking by 15.9% from the previous month's 2.5-year peak. Together, that pushed the Silver Investor Index up from 54.9 to 55.9, a new 2-year high. How does BullionVault trading compare to other markets for gold and silver? Data, I think this is a good question. Data from the U.S. Mint, meantime, suggests that household demand for new gold and silver bullion coins remains weak, falling on September's price rise to barely 1/4 the level of the same month last year. That's telling. But the data from BullionVault trading may be a trend-worthy thing to definitely pay attention to. Gold jewelry demand is also struggling to digest these high prices in the giant consumer markets of China and India. Among global investors wanting more cost-efficient exposure, silver's largest bullion-backed ETF, the iShares Silver Trust, SLV, saw net liquidation of 1.6% in September. But like BullionVault, gold-backed ETFs also saw another month of inflows, taking their total backing very close to 2012's record and putting its 4-month inflow of the largest since early 2009, the depths of the U.S. stock market's banking crisis crash. Now, net liquidation of 1.6% in September, people are dropping, they're selling their shares of the iShares Silver Trust, SLV. That's causing a dip in the silver price, widening the ratio, I believe. And this and the increase of the gold back to these of inflows, I think, is what's keeping gold up. The article goes on to say that indeed gold-backed ETF investment has now absorbed 1 ounce in every 3 mined worldwide since the start of June, according to data compiled and updated by the World Gold Council. Bottom line, widening political fractures make a strong case for spreading risk with gold, but the looming burst of fiscal stimulus plays to the pro-cyclical appeal of silver. Silver, heavily used by industry and traded in a market only 1/10 of the size of gold, has also been used to exchange and store value for thousands of years. That's very important, I think. And we're going to take a look at this chart here to see that. Judging by September's activity on BullionVault, marketplace for the single largest pool of Western private investors in physical precious metals, a rising number of people expect that financial use to keep growing. So I think it's probably safe to say that we'll see some of this stuff continue here. Let's take a look here and see what this industrial demand for silver. You've got photographic silver use, silver demand. I think this is just a general white paper on it. And then we see silver investment. This is the larger chart showing that LBMA, BullionVault here, what's going on in silver investor indexes versus the monthly average price there. So very interesting indeed. It's fascinating to see these things pull together and what's going on, and it could be a trend. We could see, this kind of, I think this backs up my claim that people are still seeing, those out there, investors out there, people in the financial markets are playing and toying around in the exchange traded funds and the paper silver until we really see physical demand like we're seeing here, at least at BullionVault, anecdotally from them. They've admitted and confessed that doesn't match up with what the U.S. Mint is showing, but it could be a beginning of something big potentially for silver. But I think silver's got to hold on to a certain price point before people really start to take it seriously again as a hedge. Now, you and I, make no mistake, we understand that it's a hedge, that it is a preserver of wealth in the long term. But it's losing favor in some cases from the lay folks out there. And until we see that demand pick up in the physical side, not just from BullionVault, but from other sources, I think we're going to continue to see these wide fluctuations and continue to see a wide gold to silver ratio. And even when it narrows, it's not going to get to the points where you and I feel it should be and comfortable with. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.